Welcome to Trading Lounge and the US indices for the 4th of January, starting with the S&P on the weekly chart here. And the reason for showing this is twofold. Is firstly, last year we were looking at this trend moving up through here, and we're always trying to find the top of wave 3 within all of this. Now, this is the length of wave 1 here, and this is also, this yardstick here is just the same length. So we can quite clearly see now that we've moved above the length of wave 1. So we'd want wave 3 to be the longest in the trend, and that would leave wave 1 and wave 5 roughly the same length, with the extension in the third wave. And we can see that this is all part of the same leg, really. I mean, this here is one leg, you know, and then it changes into this leg, but this leg here is all the same leg here. It's quite normal when we're using the trading levels to see wave 3 hit a major level like this in this degree of structure that we're talking about, and then wave 4 and then wave 5 in this instance. Also, too, when we reach the top up here as well, I know that I think Bob Pritchard from ElliottWave.com, you know, he's been looking for the top. He's been looking for this top of the market here since my chart doesn't even go back that far. So, but anyway. I do believe there will be a serious top here, and there will be a sharp move here within all of this, but I just think it's going to be a sharper wave 2 within all of this. Okay, but we'll get to that when we get to that. It's not the end of the world here when we reach the top. Okay, so I've still sort of scratching my head a bit how we should sort of count this, and I've been working 2 counts, and one of them that you know, which is this one here. Let me just get this onto the page. So where all of this move up here being wave 1, which we took from Microsoft at the time, we probably won't use this count now, and wave 2 here, then wave 1 and wave 2 here, then 1 and 2 and so on to the upside. Now, to prove this count, we still, whatever, to prove a bullish count, we need to take these highs out here, and we'll talk about that in a moment. The other count, which I sort of prefer more so, is this one here, where we can have a bit of a look at this. So this would be from wave 4, primary wave 4 here, to intermediate wave 1, intermediate wave 2 here, then minor wave 1 and 2 here, then minute wave 1, 2, 3, 4 and 5 here for minor wave 3, and then looking at this here as minor wave 4 here with a WXY here, and then 1, 2, 3, 4, 5 to the upside. So this little area in here we still need to resolve. I think, let me just check what chart we've got this on. Okay, so this is from this other count here. So in a nutshell, we need to make a new high above here. I was looking at this in terms of this is a tick chart here. This is just 5 ticks. So this move up here is 1, 2, 3, 4, 5 for C of B here. But I can see that this is starting to look corrective. It's still bearish if this low here is breached. Okay, that's the short trade. And we've got an A and a B and a C here. So it's possible for it to do this. Otherwise, we'll need to look at this as 1 and 2 and 3 and 4 and 5 moving up here, and then building, you know, continuing to build to the upside at that point. So the main point here is that this is the 4,800, and so we were looking at 1 and 2 and 1 and 2 to the downside. So that's still on. It's just that Apple had the same, and other stocks had the same count as this, but Apple has led the way and taken out the tops here. So that tells me that I'm wrong and we need to go long. So how we go long here, we'll talk about that in a moment. So yeah, we'll probably see this being breached. It's not confirmed yet, but because of Apple's moved up, then we'll need to look at this like this, and then we'll also need to look at this as wave 1 here and wave 2 here, but let's just take a look at that on another chart here. Not so much this chart. Let me just go to the hourly chart here. Okay, so this here better explains the correction here. So can you see that wave 3 over there? So an ABC for the W, an ABC for the X, and ABC here for the Y of 4. And then we look at 1 and 2 here. And then we sort of head up here. Now, once again, normally we would expect wave 3, whoops daisy, let's just do this a different way. Let's just look at this here as wave 1 here. Now, we'd expect wave 3 to be longer, but because we're going into 5,000 here, there's obviously going to be some serious profit taking going on, especially in the ETF market and so on, you know. So wave 3 could end up being a bit shorter than wave 1, but that means that wave 5 here would be a little bit shorter than wave 3. So this wave 5 would be shorter than this wave 3 at that particular point in time. And then we can look for the really the sort of, we're looking for the wave 3 here to be the arrival, but it doesn't have to just hit on the 5,000 here. It's like Bitcoin at the 50,000. It can go above that. Normally it goes into 1, 2, and 3 here somewhere. So that's what we'll be looking for at that point, okay? So first of all, to get this count correct, we need to make a move above the 4 here. So within this here, all we need to do here is really just look for the first little high above the level, and then there will be some little pullback in here, and that pullback in here will give you the opportunity to move in on the market. So we can look at that coming across here, or if you can't get the second high, you can just wait for the first high here and get that first little 5 waves up here that we're just talking about on this 5 tick chart here. So here we can look at this as 1 and 2 and 3 and 4 and 5 up here, then the ABC pattern here. So it's going to stick to this number a little bit before we go anywhere, okay? So that's where that is, really. So let's just rewind this here, and this is the 1 hour chart, and this is the correction here. So we'll have to go with the W, the X, and the Y. There's other ways to count that as well. I understand that, but I feel that this is the best fit. And yeah, so that's it. So once this top is taken out, then we're bullish at that point. We have to turn bullish. So even though we're short, looking to go short here, and we can still do that, it's just that it doesn't look like the case. We can go short under here. That's what I was looking for. But there we go. I was wrong. But and now we need to be long, but no damage done, and we'll be looking once the 4,800 becomes the tested support, and all of this consolidation under the 800 here will be the support. And this is the accumulation process. So we should have a nice push up there once we've got that small little retest in there. It's okay. You could probably buy at the moment and keep the stop well out of the way here as well. Yeah, buying the pullback would be a little bit better. Okay, so let's just have a quick look at the NASDAQ and the Russell. So where's the NASI? Here we go. So I've got the NASI 1 degree high still at the intermediate wave 3 and 4, but I'll probably change that as well, but I'll need to go back and have a look at the bigger picture. But even so, we still need to look at it as a WXY at this point, and looking at this as wave 1 and 2. But you can see here as well, we could look at this as the ABC here, but we still need to take that top out there. So I suggest that this 16,500 is the medium level, and you'd want a nice tested support on top of that before going long, okay? And the Russell will be much the same as well. Let's just check out the Russell. Oh, there it is. Okay, so yeah, last time we spoke, we were looking at wave 3 here with an A and a B and a C here for wave 4. It's a little bit simplistic. Once again, the move up through here within all the stocks and all the indices we can count as wave 1 and 2. Now, the Russell has taken out a high here, confirming that. So, but what we need to be mindful of here, we could still view this as an A wave, a B wave, and a C wave up to here, and then come down at that point. So to rectify that and to have a safe trade, we need a classic trading levels pattern sitting on the top of minor group 1, which is the 300 here, major level 2, and then 1, 2, 3 to make up group 1. We want a nice tested support sitting on that level there, and you know what that looks like. It'll be like this: the arrival, the reaction, the first high above the level, the ABC. And so it is a process. It does teach you to be patient and you need to be patient to get your timing right, you know. So that's really what we're looking for in this particular space here. We could probably refine that if we just go to the tick chart and check on that. Let's just see what we've got here. So yeah, this all up here counts quite nicely as 1 and 2, then 1, 2, 3, 4, 5, the third wave, fourth wave, and fifth wave. So the third wave is the shortest. The extension's in wave 1 here for this market, and an ABC here is fine. This is like, you know, this is a bit of a dog leg here. It doesn't look very nice, so that needs to stay in place. So we don't want that low there breached. So if you're going long, then you need that low to stay in place. That's where your stop has got to be. This is pretty ugly as a wave 1. So this is why I was thinking that in one way or another, we would be looking for the first high above the level, and then some sort of little, I've probably made that a bit big, but you get the picture. We need something like this here to be, if you're looking for the safe trade, that is, you know what I mean? But sometimes I find it's okay to build a very small position in here, and then a position on the 300. And then also with the 300 here, you've got, these are minor group. This is all minor levels here, minor top of minor group 1. Then you'll have 10, 20, and 30 here. So you can scale in using these levels here as well. So building 3 or 4 positions above that there. As each one of these levels gets a tested support with its own little classic trading levels pattern in here, then that's safe to build into. So that's where you can build the trade, but would probably move up into there. I'm just not quite sure how to count this dodgy little dude in here. If I had to count it, it'll be 1 here and 2 here, 1, 2, 3, 4, 5 for the third wave, fourth wave, and fifth wave here. But you know, there's a lot of rules being broken, and that also looks impulsive here as well. It's possible to put the B wave over here. All of these sorts of things. It's not a good looking picture here, but based on the 5 waves here, that means we'll get another 5 waves. So we should be good to go up there, but you have to keep your stop under here for that. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.